Donnie, let's jump over to film. We've had some great high-profile productions of late in Hawaii. It's been a really banner couple of years. How much have film credits had to do with that?
I think they've had everything to do with that. And if you look at the history of this production tax credit known as Act 88 now /89, it is a refundable production tax credit that has generated more than $2 billion in direct spending since it was established in 2006.
And 88-89 took the place of the film component of 221, is that correct?
It did. I mean, there was some crossover, but I would like to say that 221 was not all that bad. It did some very, very good things for Hawaii, and not the least of which was attracting talent here on the creative side. But it was not tailor-made for film. It was a lot more complex, and I think with regard to our credit, Act 88, we needed something that was going to be readily accessible, that was going to be easily quantifiable, because at the rate this industry moves, they need to know in an instant what kind of cost savings they're going to be able to realize by coming here, because those decisions are made at such a late stage in the game, and they can change on a dime. More than 40 states in the U.S. Have aggressive incentive programs, and Hawaii has this distinction of competing more with other countries than we do other U.S. jurisdictions. And so the difficulty for us is that we are competing with nations, and we are. It's difficult too in that we don't have the same resources that we can bring to bear. Having said that, our credit is now the legislature. We're very grateful for an increase that we received last year that takes it to 20 and 25%. So essentially, that is 20 cents back on every dollar you spend on Oahu associated with the production, and 25% for all the neighbor islands. We want to grow this industry statewide. We also want to showcase the diversity statewide. And the important thing to remember is that you are not giving this credit out unless there is significant dollars being spent. And everything that qualifies for this credit is subject to Hawaii tax. That's what makes it a qualified expenditure. And
so in other words, it has to be that film production paid a salary to a local Hawaii person who's paying state taxes. That would be an example.
Right, it would, but it is inclusive in it relates to all expenditures, whether they be labor, whether they be all goods and services that are subject to Hawaii tax, whatever that may be, GET, income tax, TAT. So it's in that sense, it is good for the state, and there are layers of give back that I think the state realizes from this credit. One certainly is the workforce development and educational component. For every production that qualifies for this credit, they have got to make a cash or in-kind contribution to a local public or charter school, or work with one of our unions to do internship programs. To date, we have on the magnitude of more than $800,000 in cash and in-kind contributions that have come in as a result of the credit.